Alright, what do we have going on today? So the time has finally come. A couple of days ago, I finally closed the last trade for the month of May. So I'm going to go over the results of that month. I'll also briefly touch on a couple of trades taken during the month, explain some of the negatives and positives of those trades, and like in all my videos, I'll break down the whole strategy and hopefully, somewhere in this video, you'll find some value or at least an idea you can probably use in your actual trading. To give you guys some context, I've been trading this strategy for a couple of months now. I've taken roughly 80 trades using the same strategy, and on the month of April, I actually managed to pull off one of the cleanest set of 9 trades, meaning that there were little to no mistakes during that month, and the setups were mostly all good with only like 2 trades being somewhat of bad trades. The result of those 9 nearly perfect trades was a staggering 8% return in profits, which may not sound like a lot, but is actually an incredibly good return in a single month. In fact, it was so good that I told you guys and myself that once I completed 30 trades and was profitable in those 30 trades, I was going to fund a real live account with $10,000. So ever since then, I've been trying to replicate that performance and take the best setups there is out there. Now some more context about my account. As of today, I am currently running a $5,000 simulated account. Why is it simulated, you may be asking? Well, as I always say, there is no real reason to trade with real live money without having a clear understanding on the strategy and how your strategy works relative to your psychology. And if you still prefer to trade real life money without having this understanding, then to you I say, you're honestly better off gambling in Las Vegas. But like I mentioned, the plan is to execute 30 good trades with minimal mistakes, and if I'm profitable at the end of those trades, then, and only then, will I fund my account with $10,000. And I'll make it a promise to you guys to have full disclosure and show you guys not only my spreadsheet, but actual brokerage statements. Alright, so with the month of May all being wrapped up, I took a total of 11 trades this past month. A little more than I expected, and also a little more than the prior month actually. But the question is, was I profitable? Let's get a quick drum roll real quick. No, I was not profitable. In fact, I actually lost all my gains from the last month and a little bit more than that. It's sad, I know. Turns out, it's a little harder than you might be thinking. Executing the same strategy over and over every single day, and the days that the setup isn't there, just walking away, is very, very, very difficult to say the least. And it's not something mechanical like not adding a stop loss, which has an easy solution. But in my opinion, I think it's actually psychological. For example, in most cases, you most likely already know how to identify the clean, perfect setup. But sometimes your mind will play tricks on you. This is mostly prevalent when you haven't taken any trades in several days. So you naturally grow eager to pull the trigger on even the cheapest of setups. Your mind will play tricks on you and make you believe that the setup is good, when in fact it is a terrible setup. This, to put it simply, is my biggest problem. Though I think it is one where repetition and good practice will eventually solve over time. Although if I'm being honest, running a Discord where I send out a daily watch list doesn't really help out a lot since I often feel the need to send out a watch list every day, and that naturally makes me want to cut corners and send out pretty cheap stocks, not gonna lie, when in fact there's just nothing really good that day. But I'm gonna refrain from this. In fact, if you look recently, I've actually been doing good, sometimes even going several days without uploading a list. This may seem bad, but it's actually good, because I'm holding a high standard for the setups. And I promise I'm not just being lazy, I'm actually scanning through the top gainers for the day in search for a good setup. Obviously, the difficult part is carrying this process out over the months and even years and decades to come. This is difficult. But with all that context in mind, I apologize if this isn't the video you wanted to see. Maybe you wanted to see more profits, more money being made. Maybe you wanted to see someone give you a clear formula on how to get rich. But that's just not realistic. In fact, I'll argue against this and say, these types of videos are probably the videos you need to be watching. I think you ought to be watching a struggling trader in the early phases of profitability, mainly because, let's be honest, you're probably in the same phase, if not a lower phase than I am. So I think this information is not only relatable, but it's digestible. Chances are I'm most likely dealing with the same problems, if not similar problems that you're dealing with right now. And I'm sharing the framework and remedies being used to solve these problems, which is key. I'm not here to show you guys huge profits and make them seem easy to obtain, but instead, I'm here to show you guys the slow process and grit required to actually achieve some level of wealth in the long term. In fact, I'm literally trading a simulated account until I can fully understand the strategy and my psychology before I even consider trading real money. And I'm suggesting you do the same. So please, I ask that you not get fooled into thinking you can get rich easily and quickly. This is an extremely hard business that takes time and a lot of mental strength to even just survive, let alone thrive. But let's get a little technical now. So to begin, I started off the month with a pretty bad setup. I literally gave this one a 0 out of 5, meaning that it did not meet any of the criteria required to classify it as a good setup. Of course, during the moment, this setup probably seemed like a prime setup, but like I mentioned, your mind will have a tendency of playing tricks on you. But give it enough time and you'll find yourself catching yourself having these conflicting thoughts during the moment, and it becomes much easier to focus on the real good setups as opposed to the cheap ones. It's really all about persisting on yourself to trade good setups. Hence why I review all these trades, typically at the end of the month once my mind is clear. Only in a clear mindset can I actually rate these trades properly without a bias. Looking to the right, you'll read here it says mistake. No breakout, no resistance, small average candle, low volume, overall trend was bad. These are the 5 criteria I look for when searching for quality setups. I'll discuss every one of them in detail shortly, but going back to the bigger picture, if you notice on the left hand side, I have check marks or X's indicating if the setup was valid or not. It just so happens that 4 out of the 11 trades were not valid setups, so that is not good. And I'm not going to lie or even try to argue that removing these bad trades would have resulted in a profitable month, because in fact it really wouldn't have. It would have still been a losing month regardless. But what I cannot ignore is the fact that the losses would have been a lot smaller had I only taken the good setups and not the bad ones. In fact, I would have been still up 4% considering the prior month of April. These are stats that cannot be ignored. Anytime you see massive losses like this or streaks of losing trades, make it a habit to go over them at the end of the week or at the end of the month to see if they were actually preventable or not. In my case, those bad trades costed me $200, which is roughly 4% of my account. This is obviously a lot to me. So the total loss of the month was roughly $500. Obviously a lot of money. And a $200 decrease of this $500 would have been a big difference. Let's talk about a good setup now. In fact, as an example, I'll use the only good setup that actually resulted in a profit. I keep mentioning good setups and bad setups, so it's time we answer the question, what is even classified as a good setup? The bad setup will naturally arise as we break down the good setup. So to begin, you need to first have a predetermined pattern to look out for. In other words, an ideal chart setup you think has a good success rate. For example, in my case, this is what the ideal setup looks like. And the goal is to try to find setups that look identical to this every single day and only trade those setups. And you need to do this without lying to yourself, and instead be real with yourself about the chart you're looking at. You can also always save charts throughout the months and years. Charts like this will be classified as prime setups. And if you ever have doubts about any chart at any given day, you can easily refer back to the list and use those as comparison. Of course, during the comparison, if that stock has all similarities and all criteria is met, then it is probably a trade worth taking. If it looks nothing alike like the ideal setup, then it's best to avoid taking that trade entirely. Now, what exactly are those similarities? Since we don't want to just eyeball the setups or guess, here's where you'll need to have a clear description of the criteria. Initially, this will be a little mechanical, but eventually, as you get familiar with analyzing the criteria throughout the hundreds of charts, it'll only take seconds to analyze a chart and recognize a good setup from a bad one. Now, what are those criteria I mentioned? Well, in my case, I have 5. I should mention, they're all equally as important, so I won't rank any in any particular order, and I don't think you should either. The last thing you want to find yourself doing is saying things like, oh, the volume is the least important criteria, so it's okay if it's missing in this chart. This is exactly what I mean when I say your mind plays tricks on you. Never justify a bad trade. It never ends well. Missing one of these criteria will drastically bring down the probability of a successful trade, and can probably even make it fail completely. Number 1. Aggressive green bar. Otherwise known as an engulfing bar, elephant candle, whatever you want to call it, it's a huge explosive candle that engulfs many prior bars. Another thing to mention about this elephant candle is that it cannot have big wicks. A big wick either on the top or the bottom implies some sort of weakness and hesitation. You don't want that. Now keep this in mind. All these trades are done using the daily time frame, using daily candles and daily charts. So naturally, all these are considered swing trades. Number 2, clear, real resistance. The resistance level prior to the breakout needs to be a clean and clear resistance level. And most importantly, it needs to have a lot of data. This just means that it needs to be an old resistance level. It cannot be a couple of day old resistance with only 4 to 8 candles. The more daily candles the resistance has, the better and stronger the move will be. Number 3, breakout. Here's where the emotion of the market as a whole becomes really prominent. After a breakout occurs, massive waves of buyers and sellers kick in, everyone with their own reasons. The only way to determine if the breakout was actually valid and in your favor is if the daily candle actually closed well above the resistance level. This is a little discretionary, but keep in mind, the further away it is from the resistance, the better. You don't want to see a slight weak breakout with a daily candle just barely closing outside of the resistance. This is a clear sign of weakness. Number 4, overall trend. I honestly think missing this criteria or misreading it on the chart will almost certainly destroy your chances of a successful trade. The best way to visualize this is using the 20, 50, and 200 moving average. The moving averages can really only be doing 3 things. They're either going sideways, which is okay, though not ideal, or they could be pointing downward. When the moving averages are falling down like this, delete the chart automatically and don't look back. These types of setups will kill you. The last thing they can be doing is pointing upward. This is obviously the ideal case scenario. When buying any stock, it's the general rule of thumb even for investors, to buy when the moving averages are pointing upward. And it's the same with this strategy. You want to buy with the overall trend, not against it. Number 5, volume. Though not as important as the overall trend, it's definitely a good indicator that shows us the real direction of the money being pumped into the stock. And you just have to assume that whoever is putting in all that money and interest into the stock knows something you don't. And why not join in? At the end of the day, this is the money footprint. Of course, the higher the volume, the better. Ideally, a massive spike in volume is what we're looking for. So a spike that dwarfs previous volume is precisely what we want. And all those things combined is what makes up a good setup. If a setup doesn't have all these, or even if it's missing just one, then it's considered a bad setup. I really only get to see about 3 ideal setups a week, but that's more than enough to make some good money. The hard part is only trading those 3 setups and not any other cheap setup. Okay, so now that we discussed the chart itself, I'm going to throw in a little extra and talk briefly and quickly about the entry, stops, trailing methods, and risks involved in the actual trading procedure. Okay, real quick, where do I enter? I enter right at the close of the aggressive green daily candle. So I buy literally in the last couple of seconds of the trading session. In my case, it's around 12:59 p.m. Pacific Standard. Second, where do I put my stop loss? Once the daily candle closes, I simply place a stop loss order at the midpoint of the aggressive green candle. The way to get this number is by adding the open and the close of the aggressive candle and then dividing that by 2. This is my stop loss. What about the target? The target is 75% from the close. So let's say the aggressive candle closed at $10 flat. We use a little bit of math and multiply that number by 1.75 and we get 17.50, which is a 75% increase from the close. That's my target. And lastly, we have the trailing method. This is applied as soon as the first trading day closes, whether it's an advance in price or a slight decline in price. You move your stop loss 1/16 under the newly formed daily candle. Keep in mind, if the new stop loss is moved up and is still under the entry price, it's considered a trailing stop loss. If it's moved up above the entry price, then it becomes a trailing profit method. You can easily figure out the 1/16th price by asking your AI chatbot. You just probably need to input a couple of numbers or screenshots of the daily candle. This is what I do every day and it's quite fast and effective. Now, you're probably fine with all this information being laid out, but there's still one thing I'm purposely missing out, and that is position sizing. Some of you guys may already know exactly how to do this with just the information I already gave you guys, and I salute those who can. But those of you guys who can't, I'll be making a second video breaking down position sizing, and maybe even making a live video where I go step by step on the actual trading process. But for now, this is good enough. I do want to end the video with something I think may be concerning some of you guys, and it is this. You may be wondering, why is this guy even promoting his strategy without even knowing if it's profitable or not? That's a good question. The simple answer is this. You almost certainly will not blow up your account using this strategy. In fact, you almost certainly will not be losing large amounts of money trading this system. I won't guarantee this for legal reasons. Obviously, trading is inherently risky, and most of you guys will lose money. But if you follow the rules even by like 70%, especially the risk management rules, so not including the technical analysis, which is psychological in my opinion, and seems to be my biggest problem at the moment, though an easy problem to solve, I must admit. But if you follow the rules laid out, you'll almost always be hovering at the break-even point. And if you do it flawlessly, including the technical analysis, maybe, just maybe, you'll find yourself hitting the vein of gold you've long been searching for. In other words, if you get the technical analysis part down, so trading only valid setups and not justifying cheap setups, plus, if you follow your risk management process, you can very well start to see some profits at the end of the month and year. So why do I promote this strategy? It's because from the roughly 80 trades I've taken using this strategy, I found this to be a good foundation to get myself situated in the market. I have not blown up any of my accounts, and I'm still essentially at break even. This not only has allowed me to survive in the markets, but also gives me time to build character, learn my strengths and weaknesses, and actually have time to work on those weaknesses. So by the time I trade with real money, I know for certain with experience trading this system, and most importantly, knowing how my mind works relative to this system, that I will in fact make money at the end of the month and year. So as long as I persist, this is what I think is required of becoming a seasoned, good trader. So where do I currently stand today? Well, so far I placed 2 trades in the month of June. So 2 trades in 5 days, this is actually really good and in line with my expectations. Both were also prime setups as well, with one being a $95 profit, which we just exited out of today actually, on Friday, and the other a $22 loss. Perfect. Alright, I think that was a really good update. We're already starting off the month really strong. Hopefully we finish off the month good and regain our profits so that we can complete the 30 trades and actually start to trade live money. But for now, thanks for watching. Make sure to check out the Discord. It's completely for free. Daily watch list every single day. Leave a like, comment, subscribe, and stay focused, you guys.